This is Greg for Teslafaninsight. Today we focus on something called the Tesla 00 curse. So obviously the question is, what is that? This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Tesla Semi for joining us for this show. You actually can get one on the website if you're of Tesla, if you're so inclined, but we wanted to bring it in as part of our props for today. We also want to thank our Patreon supporters. Your support is greatly appreciated. We also want to thank those of you who choose to like and subscribe. So today's show is, as usual, somewhat unusual. As you'll notice, we tend to do shows mostly on investing and Tesla, but in a lot of other areas on the company as well. And today is no different. So I actually had a conversation with one of our viewers last night, and he made a comment to me that surprised me, which was, we do a lot of coverage. We did a lot more investment coverage right around when the S&P transition occurred. And there were some things we said to him about 15 minutes before the S&P transition that really influenced his investing trading successfully. So today's talk was sort of flying off of that because there are a number of you who've been watching us for a long time that know about a bunch of the principles that we teach on investing related to Tesla. Most of them are fairly well documented by Peter Lynch and others, but there are others that are not. So today I wanted to add to that list with something that we call the Tesla 00 phenomenon. So what this is the fact that anytime Tesla's stock price gets close to 00, as in 600, 700, 800, etc., there are these movements that tend to happen with the stock that affect greatly what's going to happen for that day and probably 2 or 3 days afterwards, unless there's some other variables like a big earnings announcement or the market crashing or going way up or something like that. And so in this case, what the 00 phenomenon is that as soon as any stock, including Tesla, gets to that 00, in this case we're talking about 600, what will happen is a number of things that will have a big impact on what the stock price does. The first thing that happens is that there are a large number of owners of Tesla shares, be it institutions or individuals, that have programmed their stop loss to execute at the 00. So what a stop loss is if you own shares in a stock or an option, you can actually pre-program your computer to simply sell everything you own or a portion of it if in fact you get to a certain dollar point. Now, this is actually an excellent discipline because, as you know, Tesla stock price can move very quickly. And so if you don't make the move don't have time or you're busy with other work, you may not see the point where it gets to that number and you need to get out. And so having it done automatically can really be helpful. So if you go back over the last year and a half and look at stop losses against Tesla, the trend has been that it's actually been a good idea to do this. So again, a stop loss might be something for you to look up where it will automatically sell you out if in fact you get into a certain price range. The second thing that I wanted to review, so there are a bunch of data points surrounding stop losses you should be aware of. For example, number one, if you get a stop loss and they sell out your shares, you now have to pay taxes on the gains that you made on the stock if you get bought out or if you get sold out in this manner. So you gotta have to calculate whether or not you want to do the stop loss routine because, like, if it's in your retirement account, the taxes are no big deal, so getting sold out is not a big deal. But if it's not, you could end up with a big tax bill that you have to pay because your shares have been sold out without you being a part of the party directly. So the other thing that happens with stop losses is that the market makers actually get information from everybody. So for example, E-Trade or Robinhood, all these entities are telling the big banks how many shares are set up on those stop losses. So all of a sudden, you have this interesting phenomenon where the large institutions can do this routine where they say, oh, we see all those stop losses right there. We could actually hammer them. The stock price could be controlled nicely. So what happens is large institutions tend to have what are called, I call them sniffers. They're bots or robots or computers, just like what you're using. The key to it, though, is they're instructed by their hedge funds to say, hey, if the stock price drops below 600, or we hear bad news combined with heavy movement of the stock price, let's sell quickly now and then come back and revisit the issue later to figure out what happened, because it may have been a good or a bad decision for it to be sold out. But you have a stock in Tesla that can move very quickly up or very quickly down. So that the fact that you have the stop loss in could actually be very beneficial, because it gets you out and it preserves all the losses you might have had if you didn't have time to get to the news that was influencing the stock. So the interesting thing here is that there's this phenomenon, and you may want to read up on stop losses and how it influences stocks, where the stock price, so let's say you decide, or institution decides, to sell at 600. Well, all of these computers are telling the NASDAQ computer, we all want to sell at 600 once the stock gets to 600. So the next opportunity to sell, we want out. So if there are just a few people, small numbers of people that were at the 00s, you'll notice that the stock price may dip below 600 into the 595s, 97s, etc. And then, give it a rest of the day or the next day, it'll be back over 600 and happily so and heading up. The other side of this, if there are large numbers of people and computers waiting to sell right at 600, you can have this phenomenon where your stop loss occurs in terms of your selling at the first opportunity to do so. So what this can turn into is that you've decided you're going to sell at 600. Great idea. The problem is, what if 100,000 other people have decided to sell at that price point as well? So what starts to happen is the stock price will go below 600, and it can actually keep going until you get a sell price. So in theory, you told it to sell at 600. You might not get sold out until 595, maybe even 590. So if you go back and look at the charts of Tesla, and you may see this occur in this case as well, depending on the size of the selling at 600 group, you could also end up with a situation where you can't get out until the price has dropped significantly. I mean, in theory, it could drop 30 or 40 points if it was a heavy selling pressure situation, but usually, it's maybe 3 to 5 points below, the sell price that you were targeting. So the phenomenon we've noticed with Tesla is you have this trend when we get to the 00s and it's comfortably below 600 and this process is occurring. Usually Tesla's stock price will swing into the 80s, be it 680 when it was over 700, same thing above 800, and in this case would be above 600. So the 580s is probably the bottom of the trough, and then we kind of come back into the 90s and back over again. So I wanted to do this show today because we're heading towards 600, and I just have this sensation of, we've seen this so many times before, that it might be something for you to be aware of. There are people, so the other side of this is there are some people that are like, oh, we know the phenomenon of the 00s. Why don't we make money on it? For example, buying puts at 600, if you see a lot of selling pressure heading there, means that all of that down in the stock price, you start making money. Selling calls is another way to deal with it. So there are all these techniques that you can take advantage of how this phenomenon works. But it's useful to you be aware of it, because there are some people that are like, hey, I was planning on selling some stock and I needed at least a certain price to be at a certain level for sale. Remember, you can always buy back in if you put a stop loss in at 600 and the stock goes below. So the logic of it is, think about it, particularly with Tesla, if a lot of action is happening and the stock moves heavily down and the market is forcing it down, we can actually have a very tough situation trade-wise that's going on. And I just think that it's a useful tool to have in your quiver to actually be aware that there's a curse at the 0, for most stocks, including Tesla, where it can also drop heavily. Now, another sort of subset of this party is 650. So the 50 and the 00s kind of behave, what I've seen, very similarly when it comes to Tesla. So again, a lot of people putting in 650, 750, 850, even in 550 stop losses will cause that to also be a strike point for when stop losses occur as well. So I wanted to bring all this up because, you know, everybody wants to stay loyal, and that's good, and not sell and stick around for the long term. Excellent plan. The challenge, though, is what if you have this phenomenon where you get stop lossed out because you put it in, and you now are able to rebuy instead of having to buy it at 600, you can buy it 575 or 580. You now have that 25-point gap down that you didn't get hit with, and you can buy back in and regain all the money that you would have lost had you not used a stop loss in that fashion. Now, I want to get, we've sort of given you a general sense of what this is, how it works, etc. I just want a brief look at some of the craziness that can happen with this. And this is based on a huge move down that happened for Tesla last year after earnings around this time. As you may recall, Tesla stock price was like at 950, and then it did this routine where over a 2-day period, it dropped back down to just under 750. So it was said that there was actually someone who had bought like $1 million worth of call options on Tesla if it finished above 750. So what ended up happening, according to the story read, was that the reason Tesla's stock price fell so much is that the bank that was threatened with potentially very large losses had one of their traders create an environment in which the stock price fell basically 250 points in 2 days. And some of the tools they discussed and how they did this I thought were really interesting and you should be aware of. Number one, there was a news item that was floated on Marketplace that sort of affected the stock a little bit, and we were very close to 900 a share at the point. Then what they did was they borrowed 2 million shares of Tesla stock and sold them at a $5 to $10 loss into the market. So what this did was it triggered the bots to say, oh, somebody's selling out and they're willing to take $10 less than what they can get for it right now. Now, that kind of makes sense what just occurred in that case, and the reason it makes sense is that you have this thing going on where if you have a large block of shares to sell, you typically can't get at the money. You have to sort of give a little bit. That's why you get the bid and ask. So if you're particularly large the amount you're selling, you have to actually sell at a much lower price, like a 5 to 10 below current price, in order to get that trade done. So what the bots interpreted that to mean was that somebody's selling a lot of shares, we need to sell out too. So what happened was you ended up with, first, we're at 900. The news story starts to tail the stock price down. We then have the bots start selling at 900, and all the people who didn't want to lose their money, that made great money on Tesla, that were stop losses 900, started selling as well. So you had this cascade of selling for Tesla, and the result from all this action was 2 days later, you're 200 plus points below where you were. Now, so basically what happened was the threat to the bank where they could have lost hundreds of millions of dollars turned into a couple of $100 million profit because of all the techniques that were used there. So in general, what the goal of this talk was just to make you aware of the fact that there's a whole bunch of options action associated with the 00, 600, 700, 800, and it's also associated with the 650s, et cetera, et cetera. So you really want to be aware of these times, because you may find that the stock will actually drop 20 or 30 points below that 00, at least for a short period of time, simply because of how this phenomenon works. So there's some people that might say, oh, well, why don't I buy calls against it, make money on the upside? There are other people might say, why don't I buy puts against it, against that situation? Could I actually make money on that? Another route is, if you're thinking about buying more shares and you're thinking of buying around 600, may not be a good idea. You want to wait for all that action to take place before you buy, because you may find just as you buy at 600, that's when we hit all these stop losses, both for the hedge funds and for individuals, that drops the price of the stock. So very wise to sort of carefully manage this environment to get your win. Any rate, just a reminder of your health tips. Don't forget your 25 leg lifts per leg each morning as a way to strengthen your quad muscles. Also wanted to encourage you to consider a 2-5 or any other of those diets. No more than once a week fried foods, according to our kidney doc. Also wanted to encourage you not to go to bed within 4 hours of eating, minimum 2 hours to let the food digest before you go to bed, avoiding acid reflux and potentially upper respiratory cancer. We also wanted to encourage you to think about, if you're going to do lovemaking, do not eat a huge meal, because the blood flow to digest that food and move it around will be drawn away from other activity spaces, and therefore make you not as happy a camper. So, any rate, we look forward to your comments on this. Please remember to like and subscribe. We do a lot of investing, trading, discussion, stuff like this on our Patreon page on a daily basis, each morning before trading starts, and encourage you to be mindful of some of these phenomenons as we head into this period. So this is called the 00 phenomenon, and I think you'll see that if you watch, it is something that is fairly common and worth being aware of. This is Greg for Teslafaninsight. Thanks for joining us once again. Tschüss German, au revoir French, Heathrow, Hebrew, Khoda Hafiz, Farsi, Zdravstvuyte, Russian, Ni Hao Ma, Chinese, Namaste, Hindi, G'day, our friends in Australia, and in Jamaica we say Nuff Respect Walk Good Man. Thanks for joining us and have a great day, and bye for now.